Hi everyone, hope you're all doing well, and today we're going to talk about TTCF stock again. I want to do a bit of a follow-up from yesterday's video because what had changed from yesterday's video is that I didn't expect the move in the share price from yesterday, which really shocked me because I knew that in the short term this would get punished a little bit because of these earnings and the little miss that they did have, but I wasn't expecting the stock to go down to $17 after making that video yesterday. As you probably know, I was making that video when the stock was down like 7%, and I was like, yeah, probably like a 10% dip on a small market cap company that's not crazy valued is probably about a fair amount, but then it went down even more than that. And I was basically saying I probably won't buy this company, but then it dropped a huge amount. I can't remember exactly. I'll be showing you guys. I think it was like 17%, was it? The stock was down a lot more than what I thought it would happen, and it seemed like a very big reaction off these earnings. And I thought, you know what, it deserves to get punished in the short term. If your company doesn't perform in the short term, it's going to get punished. But when I saw that and I saw the reaction of it going down to back to May prices, I was like, okay, that was a bit crazy. So I feel like kind of going through this today would actually be quite useful. I was also going to talk about a UK stock, which I'm sure many of you guys might know which UK company that is and probably want to see a video on that UK company. I was going to make that today, but I'm going to put it back tomorrow and just talk about that then, because I wanted to make this video a follow-up from yesterday's video, but I will get covering it at some point. But some of the points that I make in today's video you could actually use for that company as well, but like I say, I'll try to cover that later on anyway. But I wanted to do a little bit of a recap into TTCF because yesterday's video was massively received differently through a lot of investors. There was a lot of investors that were ultra bullish, and even after that earnings report was like, it was absolutely amazing, what you want about, this was a great quarter, everything's fine. There was a couple of people, which was probably the angle that I came at, which was, I'm still massively bullish on this company, but that earnings report was pretty poor and needs to be better. And that's the kind of angle that I came at. There was quite a few people which was the bit that surprised me, and I think was probably why I'm making this video today, which a few people went, that earnings report was terrible, I'm no longer a believer in this company, I'm going to sell out this company, which was the one that kind of shocked me. And then obviously this stock is actually getting quite like quite a few shorts attracting it. Like there was a few people like in the comment section that was like, oh, I always knew it was rubbish, or this is an absolute scam company, which is actually getting quite popular for this company. It is attracting a lot more shorts, which is fine. If you want to kind of short a company, that is totally fine. I have no problem with that, but it is getting quite popular. But yeah, there was a mixed reaction to that video yesterday, which was really interesting. So I'm just going to go from my point of view here, because some of the reactions to the video yesterday did really surprise me. And the big thing that kind of surprises me, and I've seen this quite a bit recently as well, I've seen it with a couple of companies like TTCF, especially like Huya over the last couple of months, and even the UK stock that I'll talk about tomorrow, is that I'm starting to see a few people, like the mindset really change on very quickly what they are doing. And what I mean by that is that I'm seeing so many people claim at the moment to be long-term investors. Like you ask people, oh, so what are you? And they go, oh, I'm a long-term investor. Okay, so you're a long-term investor, so you're investing for probably 2 to 5 years, right? And if you're a long-term investor, what you're looking for is this growth here. 2021 to 2024, you want to see growth, whether that be revenue and profit, you want to see growth over a course of a couple of years. And if you are a long-term investor and you invest into companies for the long term and you see profit and revenue growth, what will happen to the share price? It will go up. The stock market, the thing is as well, is I see this on YouTube as well, the stock market is made to sound such a confusing thing. Like it's made to sound like it's a really hard thing to make money. It's not. The way you make money on the stock market is by buying a company and seeing the revenue and profit grow, and the share price will move. That is the stock market summed up in 20 seconds for you. And this is the thing as well, is like, people come to me and look at my, my stocks, and I think they'll look at my stock market portfolio, and you look at my stock market portfolio and you see, JD.com up 300%, Pinterest up 300%, InMode up 200%, Microsoft up 150%. And people see them stocks and think, oh, you know what, I want to do that. And then what people think is they can, do that off just this 1 year. They think they can get all them returns off this 1 year. I didn't get them returns off 1 year. Those sort of companies that are up that much in my portfolio, the best returns in my portfolio are the companies that I've held for the longest period. That's not a coincidence. That's not a coincidence at all. My best performing stocks are the stocks I've held the longest. And that's what, as a long-term investor, you want to do. If you look at the stocks in my portfolio that are the worst performers, it's not a coincidence. They are the stocks that I've held for the shortest amount of time. Because in the short term, anything can happen. And I'm not investing in a company for a short-term period. For me, it's all about the long term. Long term, you get the best results. And that's also why the stocks in my portfolio that are the best returns are the ones that I've held for the longest period. And that's the thing, is that I'm seeing a lot of people at the moment is they claim to be a long-term investor and think about this. And then I see quite a few people that are invested into a company and they only invest in that company for a quarter over quarter. I'm seeing many people that invest into a company for 3 months and then an earnings report comes out, or there's a little bit of a miss and like, oh, that's it, this is terrible, I don't want to own this company anymore, I'm selling out this company, I'm selling out a loss. And it's like, whoa, hold on. You're investing it for a long term. 1 quarter shouldn't matter. There's always going to be a chance with 1 quarter that the company kind of maybe misses a little bit on earnings, misses a little bit on revenue. But as long as there's some good things in there, that's fine. You let it go, you move on, you invest in it for a big, long period of time, not a short period of time. And the amount of times I'm seeing a lot of reactions of companies, and same for the share, not even earnings reports, like share prices, people that are reacting off share prices, like they look at a company, they buy a company, and in that kind of 3 months, 6 months, the share price is moving down and they're like, oh, this is a terrible company, I don't want to own this company anymore, I want to get rid of it, or when it gets to break even, I'm going to sell out of it. And it's like, why? You're investing the company for this. You're investing you've invested into this company for the long-term mindset, but now after 3 months you go, I'm going to get rid of it. Now, if something's maybe fundamentally changed with the company, then sure, it's maybe a bit time to panic. But if you're investing into a company for a long period of time and there was only, Tattoo Chef, for example, missed by 3 million, wasn't great, probably deserved to go down in the share price in the short term. But time to panic sell? I don't think so. They grew at 49% revenue. For me, still good. Could have been better, should have been better. But does that change me as a long-term investor? No. I invest into this company for, the next kind of 3, 4, 5 years, not for 1 quarter. And that's what I'm seeing quite a bit, is people saying they're a long-term investor and then make dramatic emotional decisions off a quarter. And I've seen it with plenty of stocks. The stocks that I kind of get the most messages about all the time are the stocks that are going down. And people panic. People panic because the share price is going down or earnings were a little bit of a miss. And it's like, so what? I'm not bothered. This company is for the long term, and I'm going to evaluate this in the next 3, 4, 5 years, and then I'll go, did it work out? I can't tell if an investment's worked out off 3 months. And that's kind of the big mindset that I'm kind of seeing people do and not realise and think about. They need to kind of look longer down the line than what they are doing. So yeah, I just thought I'd talk about that. Now overall, like I said, the stock got punished 17%. And for me, like I said, I think the quarter wasn't great. In fact, it was a bad quarter. But realistically, does my opinion change from a long-term point of view? Should I now panic? Well, for me, it was a 4 million miss, and it wasn't good. From the numbers that we were seeing and the stars they had, we wanted better numbers than that for sure. And it reflected in the share price, probably too much in the share price. Because when I look at a long-term point of view, the growth was 49% growth, which is fantastic. So many companies would want 49% growth. Don't get me wrong. 49% growth is fantastic. So the growth was absolutely, still very positive. That's why I'm not panicking. It was a little bit of a miss, but the growth was still very good. And don't forget that, I think a few people panicked a lot over the miss rather than thinking, well, long term, it's still going in the right direction. And the thing as well is, as a long-term investor into a company that sells products, what are the 2 things you want to see as a long-term investor? You want to see more products in the stores. What did Sam Galletti say on the earnings call? And this is one thing that I see massively missed at the moment, is that we're going to go from 4.4 SKUs in every store to 7.7 SKUs in every store. Huge, absolutely huge. That's one of the 2 things you want to see as an investor, is you invest into a product that's sold in stores. You want more of your products in the stores. What's happening? More products in stores. And then The next thing that was huge is that we've gone from 4,000 stars to at the end of Q3 we'll have 12,000 stars, and that will also have a full quarter of the Kroger sales in there, which should help. So as an investor of a company that sells a product, what do you want to see? More SKUs in every store and more stars. Because if you have more products in every stores and more SKUs in every store and more products, more stores, sorry, what's that going to mean? The product looks like it's doing quite well. The people that sell the products are happy with it, and then what will happen there? That will translate into more sales. Now, obviously, last quarter it did translate into more sales because we had growth. It just wasn't enough than what we expected. But this is a quarter-over-quarter report. A lot can happen in 3 months. You might just have 1 month that people decided to buy a week earlier, and that was in the last quarter. Maybe people are going out to restaurants a bit more because they can do. There's a lot of little mini factors that can come in over quarter over quarter. This is why I don't react to it. A quarter over quarter is a very short period. And you look at all the other previous quarters, if we go back to the last quarter, we were all buzzing. That quarter was absolutely amazing. And then we go to this quarter and it was like a bit beaten down about it. And even myself, I was like, it should have been better. But it doesn't change me because only 3 months ago, we were buzzing off this company having amazing earnings. And that's the thing, is try to judge it over a long period point of view. And as a long period of view from Tattoo Chef, is if we carry on getting more stores and more SKUs, in my opinion, that's going to translate to more revenue. In fact, it already is. Maybe it could have been a bit more, but that's just a quarter over quarter fluctuation that we had. My big worry would be if we kind of got more SKUs and more stores, and what was happening is this growth was slowing down more and more and more. That would be the time as a long-term investor that I would go, okay, if I look over a few quarters here, we're getting more stores and more SKUs, but the growth is struggling a little bit, and it keeps going down and down. That would be the time as a long-term investor that I see over a course of a period that I'm like, oh my goodness, it's time to panic. But 1 quarter that was still not too bad. Sure, it should have been better, but everything with the company is going in the right direction. And as well as that, we're going to have the new foods in Mexico doing a full quarter as well. So for me, when I look at Q3 will have double the SKUs, nearly triple the stores, a full quarter of the new foods in Mexico, and the Kroger for a full quarter. For me, everything that the company is doing is fundamentally right and should translate into more and more revenue growth. So when we're going to Q3, don't be surprised if we're going to Q3 and then Q3 is blown out of the water. Quite a few people would change their mind and go, oh, this company is absolutely amazing. And it'd be like, hold on, only 1 month ago we were like, oh no, it's a terrible company. And then just the reaction over quarter. This is the thing, what happens if we have an amazing Q3? Does everyone change their mind again now? It's one of those, you just got to look at what things are kind of building in the long term, and I'm still seeing growth, I'm seeing more products, I'm seeing more stores, more distribution and new foods in Mexico coming in. And over the long term point of view, it looks strong. And that's what I'm visioning it off, not over quarter. So I guess that kind of leaves it down to, did I buy? Because on the last video, which was Friday, I said that I'm not going to buy some shares. It would have to go down to my average, which was $17. Well, for me, I looked at everything. I looked at the price drop, which I thought was very dramatic for a 4 million miss. Sure, I think they deserved the drop, but then I looked at the drop it was and what had developed in that quarter, which I was very happy with about the other things that had developed in the quarter. I looked at it and thought, 17% drop back down to May prices, even after doing some decent growth and a lot of improvements in the company. For me, it went below my average. I was down about 2%, and yeah, I bought. I increased my position by 10% because for me, a 17% is an overreaction for this little miss that I had here. And once again, I look at this company in the long term, and I'm still as bullish as I was previously. I'm bullish for the company's point of view of the next kind of 2, 3, 4, 5 years, not for a quarter over quarter period. Sure, I looked at the quarter and I was disappointed and I thought they should have done better, but that doesn't affect me as a long-term investor. I don't invest for quarter over quarter. I look at this for a long-term investment, and for me, everything there is still building nicely. My opinion doesn't change on a company because of one earnings report. So for me, did I buy? Yeah, I thought this was a massive overreaction and I increased my position by 10%. And yeah, that's just my thoughts. I think a few people might have bought it. I think a few people might have sold it. But that's just my opinion on where I'm at with Tattoo Chef right now. So overall, I'm still very bullish on the company. I think there's still positive things going on with the company. Sure, it was a little bit of a disappointment the other day, but remember, I'm thinking about this in the long-term point of view. And what do I think will happen with Tattoo Chef in the long-term point of view? I see this happening. And when I see this happening, what will happen to the share price? It will go up and up and up. And I believe this will be a $5 billion company by the end of probably the next 4 or 5 years. And that's why I'm investing into it. So hopefully that was useful. Maybe a quick recap when a few people are kind of losing the faith, or maybe turning into a bit more of a quarter-over-quarter investor or a short-term investor, which were originally long-term investors, and hopefully that kind of summed everything up from yesterday's video. So yeah, hopefully it was useful. If you do want to start investing, there's some links to some brokers in the description, like free trade. Join through there, you get a free share. Also a special offer from Stake. You join through there, you get 2 free shares as well. And if you do want to join my Patreon, where I post my buy and sell alerts in real time, like my Tattoo Chef one, then the link is in the description. There's also a live Q&A session on there that was half an hour long yesterday. So go give that a watch if you are a Patreon member. But that's the video for today. I hope you enjoyed it, and I'll see you next one.